Okay, so welcome to the next edition of the Value Prop, brought to you by the Pacific Basin Economic Council. And today we're going to have a conversation with our own chairman, Andrew Weir, and get his latest thoughts and observations at the halfway point here in 2023. So from my own perspective, Q2 felt like a very cautious quarter overall in terms of business leaders' sentiment, and from those that I had a chance to speak with, partly due to the uncertainty in the financial markets and further weakness in the financial sector, ongoing uncertainty regarding monetary policy, and the continued geopolitical risks all created a complex environment for investors to navigate. But in every perceived reality, there are the exceptions. Japan's economy came into focus. The market hit the highest level in 33 years, with the Nikkei reaching to 33,700 yen in June. That has partly been driven by continuous buying from foreign investors since April. In addition, the gains have come amid ongoing expectations of corporate governance reforms and structural shifts in the Japanese macroeconomy, and the continuing appetite from foreign investors seeking alternatives to China Mainland. So I'm delighted to have Andrew Weir, our chairman, agree to join us and provide some of his own insights and observations economically. But a brief background quickly on Andrew for those who are not knowing what Andrew does for a day job. He's been the corporate member of PBEC since 2013, but he's also the regional senior partner at KPMG in Hong Kong and vice chairman of KPMG China. He has over 30 years of experience servicing listed companies, public bodies, investment funds and MNCs in Hong Kong, the Chinese mainland, Asia and internationally. And he leads the quarterly KPMG Independent Non-Executive Directors Forum. He's also very big into public service and serves on various boards and committees. But even within KPMG, he's also the senior national, global and regional roles that he serves within the organization, and currently the global chairman of the asset management and also of real estate. So Andrew was also appointed by the Hong Kong SAR government as deputy chairman of the Financial Services Development Council and chairs its governance committee. And he's also the current chair of the Listing Review Committee of the Hong Kong Stock Exchange. So welcome, Andrew, to the PBEC Value Prop. So I want to kick off with the first question. As the global chair of KPMG for asset management and real estate, what trends can you share with the PBEC community that you have observed in Q2?
Morning, Mike, and thank you. Thank you for everything you do for PBEC, the voice of trade in the Pacific Basin. Delighted to be chairman of such a great organization, Mike. Very, very interesting. I think your summary was very good, actually, about all the trends. What my role as global chairman asset management at KPMG is basically the whole capital space, the fund space. Actually, you know what, Mike? It's bigger than our banking sector. It's the fastest growing sector, and it's the biggest because capital goes across all sectors, all geographies. And I think you've got big themes now, Mike, which transcend sectors and national economies. You've basically got technology, capital, customer, ESG, and then digital transformation, and probably governance as well. So you've got these big themes. So I'm very privileged. I spent a lot of time in Middle East, as you know, with some of the big sovereigns there, and also in Canada, UK and Australia. You know, these are very big funds. So what are we seeing? I think from a capital side, there is no shortage of capital. There is a global glut of capital, and capital is sitting on balance sheets and in funds, be it sovereign wealth, be it mega funds like the Blackstones and all of those, be it passive like the BlackRocks, right through to family offices, hedge funds, etc. But also corporates. There's a lot of capital sitting on a balance sheet of corporates. So what that means is there's plenty of capital out there, but the global dry powder, if you use that expression, is probably the largest it's been in memory. Then you've got a lot of previously invested capital by private equity looking for an exit. And the exit route for IPOs is very, very variable. And valuations are very variable. because, with rising interest rates, has had an impact on valuations and basic alternative investments to cash, Mike, and the discount of cash flows has brought valuations down to some extent. But the main thing is it's variable and uncertain. So that gives rise to the real exit route on capital in these investee companies is trade deals between funds or deals between investors. And of course, that's really slowed down because of global uncertainty. Another trend you're seeing is Larry Fink, very interestingly, the head of BlackRock. I think he summed it up beautifully. Globalization, what is it? Is it 3 types of regionalization? And I think he's got a very good point. I think the unfettered globalization we had in the last 15 years, which all of us who love trade, love international business, love working together, really, these were good times. Due to the failure sometimes of national policies in economies on handling the ramifications, particularly in the West, of trade, has given rise to a different type of globalization. This new globalization, Mike, is more sticky. Supply chains are moving away from just in time to an element of just in case as well, which basically means having enough sort of cushions and buffers in it, enough alternative supply chains. And there's definitely in the US and other economies an onshoring. In other words, if we're relying very heavily as an economy on a supply chain, how can we not be overly exposed to external forces outside our borders? And it's tempting to always think this is a China issue, a US issue. It's not, it's a global thing. One of the outcomes of COVID is national security. And we keep hearing this about mainland in terms of national security law, but actually national security, Mike, for every country in terms of national economic security has given rise to, different level of globalization. So what is this globalization now? As Larry says, it's basically 3 regions: Asia, Pacific, Europe, and America. Within Asia Pacific, Pacific Basin, including LATAM, key trends: China +1. China itself, we did a survey at KPMG of China CEOs. They're bringing onshore a lot more made in China approach. But when they do have overseas supply chains, they themselves are also going for China +1. Major beneficiaries are countries like Thailand, Vietnam, and recently, as you know, Mike, I was in Cambodia. Cambodia in particular, you can see a lot coming through. So you're seeing this globalization is now, I'd say, enhanced regionalization. Then you've also got this geopolitical world, Mike, that capital is starting to follow it. So what you're seeing in Asia Pacific is the major capital flows now, I feel, are intra-regional. And the big capital players in the region are doing more in the region. And there's less capital definitely flowing in from the West, but more capital is remaining in Asia Pacific and in Pacific Basin, and more, I said, bilateral between countries. And another trend on this is the Middle East. Now, interestingly, the Middle East is now quite fashionable to call it West Asia. And that historic Middle East being in a gap, part Europe, is it part Europe? Is it part Asia? Literally middle. I go there a lot, and I've seen a seismic shift over the last 7 or 8 years, a shift east. And if you go to UAE, Saudi, these places, I think, and you go to China, mainland, and in Hong Kong, this belief that there's a natural synergy, given UAE, for example, 25% of all China trade flows through UAE ports, that somehow the internalization of the renminbi, in some ways the scaling back of the US dollar, the geopolitical world where certain elements want it to be multipolar, all working together gives rise to much more political relationships and bilateral relationships between China, via Hong Kong sometimes, with UAE in particular, and Saudi. And when you go there, the whole focus is looking east. A fair question, Mike. Is this a window of time or a structural shift? very interesting. In other words, you have all this Belt and Road talk, all of this, a lot of surplus capital, you've got diversification of the Middle East, and you've got a welcome mat in China and the rest of Asia for this capital. Is this a seismic shift? I'm not sure. It's certainly, to use one of my expressions, it's more of a trickle, but it's not a flood. And the advice we're giving everybody is very similar to what the Hong Kong government is doing: is get your relationships up and running on your corridors into Middle East. Challenge your linkages, see what opportunities there are. It is a relationship-oriented part of the world. Get some long-term commitment and long-term relationships in place, and then have the agility in your business to adjust accordingly as that sort of geopolitical new trend develops. So, Mike, a bit of a whistle-stop store, but it all started with capital and where money is. And the reality is, these days, money does reflect geopolitics. More Asian money is being repatriated to Asia. More Chinese money is being repatriated to China. And there's this new dynamic, Middle East and Asia Pacific.
So just wanted to pick up on a couple of those points. Obviously, America, the US dollar in particular, plays a big point in all of this. And inflation rates have started to come down in the US, but interest rates have remained high. Do you see the Fed having any leeway? How many more increases do you think there are, and will they take, if you were to predict, ahead of the elections? And then when we hit 2024, if there's only one more to come and then there's no more, do we think those capital flows, which you say have been more regional, could you see additional capital flowing into APAC on top of what is being repatriated?
Yeah, Mike, I think we're almost there on the interest rate rises in the States. It's a good distinction you make. Inflation's coming down, but still the rates are going up. I think the UK is a bigger concern. But what does this high US, look, what does this all mean? What it really means is economic activity is subdued. I was talking to the regional head of the big bank just the other day, and their bank is doing much better because interest rates are higher, so they get the margin. But I said the flip side of it is, because interest rates are higher, people just don't take the risk on business decisions, and they can get a return, and so economic activity is also slowing. And I think we've all got caught by surprise over the last 6 months. We were expecting a massive post-COVID explosion of activity. Yeah. But when you think about it, you can't throw that amount of subsidies, that amount of money at an economy through government financing without there being some consequence further down the track. And I think this is what's happening. It's working its way through the system. The debt figures for particularly Western countries is very, very worrying. So I think the US always does come back. But going back to your US dollar point, very interesting. Part of this trend is how non-aligned economies can also participate in models where they don't have to always settle in US dollars. Very interesting. And I was just seeing the other day, Hong Kong now is by far the world's largest offshore renminbi center. And its challenge has always been not enough denominated renminbi products in Hong Kong. But China Mainland government just announced yesterday, I'm sorry, not Mainland government, national government announced yesterday, sovereign bonds for PRC being issued in Hong Kong in renminbi.
That's big.
That's big. This is a game changer. And very interesting, in UAE, there were some oil deals struck recently in dirhams, and I think also in renminbi. So this close watch area is the rise of other currencies. I mean, China wants, obviously, renminbi to be very much a globally accepted currency, but without, at this stage, opening up the capital account, Mike, so that the economy is overexposed to external shocks.
Yeah.
But this is the change you're seeing. I do think the US-China thing dominates, and every time it seems to quiet down, something then happens to escalate it again.
Yeah.
But there's been a lot of positive talk when you look at it, decoupling, I think it's accepted now, decoupling is far too strong an expression. And the more fashionable expression now is de-risking.
Correct.
And I notice very senior mainland Chinese officials have really been challenging the Western companies on this de-risking, saying don't go too far. But I think the de-risking relates very considerably to the different technological environments which are being developed. And so there is an element of de-risking. But what I've noticed, Mike, is de-risking doesn't seem to mean exit or withdrawal by businesses from China or Chinese businesses from the West or US. It just means maybe a remodeling or a rethink, or maybe a bit slower in terms of the next step. So I think we shouldn't exaggerate. I think we shouldn't underestimate the geopolitical challenge, but I don't think we should exaggerate the decoupling.
No, and I agree. I mean, when I was in Beijing and speaking at the APEC CEO forum last month, another message was that the Chinese themselves are going to be more scientific in how they target their external investment opportunities now. So before, you could argue in between 2015 and 2019, China dominated a lot of the headlines and some of the big M&A activity that was going on, and even in companies in Europe and the States. But now I guess, in reaction to how people are being cautious to their economy, they also want to sort of express themselves that they are also taking a deeper KYC of the long-term partnership with China before putting their money into projects. So in some ways, you could say that's economic coercion continuing, but through the private sector. But I don't think so. I think the private sector these days have a mind of its own for China. And, they continue to, in some ways, defer or what's the word I'm looking for, is they seem to always buck the trend of what typically the media position them as. The Chinese have a great way of pivoting and being quite dynamic when it comes to these things. And I just want to before we carry on with other questions, the Middle East, I came back from Saudi myself just a few weeks ago. And it was interesting to see a headline that the Saudi Aramco boss has been added to the board of BlackRock. I don't know if you saw that. And so that whole area, I agree with you. You've been going there a lot more than I have in recent years. But I do see there's a lot of PBEC knowledge now and expertise in those linkages and understanding the linkages of trade opportunities between Middle East and Asia. And so I do ask our listeners here, if you want to keep up with trends, to keep looking at the PBEC website, because we'll be sharing more about the Asia Middle East connectivity and those long-term relationships. And I concur what the chairman has said, which is so important to be building up those relationships now for the medium to long-term benefit.
Mike, just a couple of reflections while we're just on China. Look, I think our own economic activity in China the last 3 months has significantly dropped. There actually at the moment hasn't been a button pressed on policy stimulus. And I think with good reason, because the memories are still long about the very, very large stimulus after the Asia crisis, which we know massive, at 4 trillion, if I remember, and how that was on infrastructure and real estate, and still that real estate issue, valuation and challenge and overheating is still working its way through. That'd be the first point. Second was very interesting what you say. You're absolutely right. China issued a whole lot of foreign investor licenses for foreign financial institutions. Nearly all of them were awarded to very big US organizations. And nearly all of those have now been approved. You don't see the headlines on that, but that is the reality. And the third one, I think, now is the recognition that how China, you used to say in the old days, when the US sneezes, the rest of Europe catches a cold. That's when I grew up, that's what it was. And I think now people realize that, when the Chinese economy slows, the whole global economy slows. I think Chinese growth accounts for about 40% of global growth. So, and then it rebounds back, doesn't it, in terms of further demand on China. So I think something's going to have to give. I think you're absolutely right. My experience after being here 30 years is the capability of the China government and policy makers, as you say, is very science oriented. The capability is very good, and their ability to implement is good. I'm sure it will be addressed.
So, I mean, just to then come back to Hong Kong, where we're based and is our home, really. I mean, talking to some of the business leaders and some of our prominent PBEC members, they feel quite optimistic, probably for the first time since 2018, about despite a slower recovery that you've touched upon than anticipated post-COVID in 2023 so far. But the mid to long-term view, they do deem quite encouraging, and most are willing to commit more investment into Hong Kong. The first question I get to you: do you agree with that statement? And what are some of the ongoing challenges and those new opportunities for Hong Kong for those external investors to think about?
Mike, absolutely. First, if I could just say, look, still the Pacific Basin still has the best demographic, long-term economic, wealth creation story globally. And people sometimes forget this. It still does. And you've always had in capital business this trade-off between everybody knowing this fantastic long-term growth story in Asia Pacific, but there's relatively short-term, sometimes better returns in the West. And the trade-off between opportunism and real strategic, investment and business, and then where is this new future? It is China into ASEAN, Middle East and India doing remarkably well. And then the other economies sitting in around this dynamic. These are going to be the driving forces. So coming back to Hong Kong, I'm very pleased with where Hong Kong is now compared to where it was a year ago. I'm very confident in Hong Kong, and I'm not an apologist for it. I always say Hong Kong changed more in the last 18 months than the previous 18 years. However, it definitely is still an international finance center. A few months ago, when doing presentations, I say Hong Kong's an international finance center, for China, for mainland China, which then plugs and plays with other IFCs. But I've now decided to change that narrative. It's back to Hong Kong is an IFC, full stop. Why? Because I've seen a lot to reach out internationally in the last 6 months. And we've had so many visitors through government bodies or through KPMG, and people are looking at it purely as an IFC. They're not, they know, yes, clearly it's an entry point into China and an exit route for Chinese capital as well. But it's a real IFC. And the key to this is this development of offshore renminbi, internationalization of the renminbi in a fairly controlled manner, and all these connect schemes where capital flows through Hong Kong into China. So I think I'm very positive on that as an IFC. I'm very positive on Greater Bay Area. Very interesting, again, Middle East, very interested in Greater Bay Area. Basically, a hinterland the size of the UK economy. The richest part of China. Two big effects will happen. More internationalization, stepping into Hong Kong, then overseas, probably ASEAN, and then, maybe Belt and Road countries. But the second one is a huge wealth effect in those cities. And it's a national priority. And when national priorities are set in the national plan, they tend to happen. So I'm very positive of that. And the third one, Mike, is for one country, two systems, put politics to one side. From an economic viewpoint, the one country, two systems potential still has a lot of opportunity, a lot of untapped potential. We just got the Wealth Connect, which has been launched, the Swap Connect. And yes, there are challenges on data, where ring fencing of data, etc. But I think you're going to see more and more goodies and more facilitation of Greater Bay Area, more and more incentives. And then still, I know at the moment the CSRC hasn't approved many IPOs to come to Hong Kong, but you look at the track record, Hong Kong's been the biggest fundraiser as a capital market for the last 6 or 7 years. So I think Hong Kong is changing, but you just need to be agile to succeed. I'm very positive One final point. Hong Kong has international Chinese community, Hong Kong domestic, local community, and a burgeoning mainland Chinese community, of which you've got privately owned enterprise, capital players, and state-owned enterprises. Now, the state-owned enterprises are all here in spades, and they have a particular way of doing things and a particular role. Linking with them is very, very important, but the other parts are not like this. They've now blurred, and Hong Kong as a super connector is coming back. So I give you an example. Some of these mainland Chinese banks, investment banks, Everbright's a good example, CICC. I know a lot of people there who are expatriates, you know, working for Morgan Stanley before or JP Morgan and vice versa. So what you're getting is this melting pot of human capital, very educated human capital in financial services and trade and, you know, construction and engineering across all these different parts of the community. And it is coming together very well. So I feel very, very positive about Hong Kong. Yes, I think if we've lost some talent to Singapore. If anybody asks me Hong Kong or Singapore, I say both. I think that's the right answer. And Singapore, I think, is a great access point for ASEAN. It's a great place for headquarters. At the end of the day, Hong Kong's got a massive hinterland on its border and has a track record of deals and making things happen. So I think Hong Kong's very positive. I think Singapore also is very positive as hubs.
But I would concur. Actually, in part of our research for our latest report is looking at all the sustainability reports of the top listed companies in Asia Pacific, and it's interesting to look at the board mix now. As you say, you see Westerners in Chinese companies, you see Chinese in Western companies. So it is a real melting pot of talent going at the highest level, which I think is so important to capture the local cultural areas of difference and attaining the highest possible standards. But I just want to, I mean, you touched on Singapore, because we wouldn't be doing it justice if we didn't go a little bit further. I mean, Singapore, we know, has enjoyed a golden streak in the last 3 years economically. However, it feels in 2023 so far, the inflation has frustratedly lingered for them, and Singapore is fast becoming less attractive as a destination to relocate significant resources to. Of course, we're talking, you know, if you're looking at 100+ headcount set up in Singapore, just because of the rents and everything else. But plus, you know, in recent weeks, there's been a few recent political scandals have been made fun of as memes on social media. Do you feel, I mean, you've mentioned when you were in speeches, if you're looking at Hong Kong or Singapore, you look at both, but is it losing a little bit of its luster in your opinion, or is it only a little blip? Which areas of Singapore are they leading on still? I think
a balanced, thanks Mike, I think a balanced, we'll take a balanced view. I think the government and business leadership in Singapore is exceptional.
Yeah.
Absolutely world-class and possibly best in the world. The ability to define, in the absence of a major hinterland, as a city-state, the value proposition is absolutely exceptional. And, you know, I look rather enviously, being based in Hong Kong, at, let's say, the development of the REIT market, the very, very big, clear and successful role of Temasek, GIC and others. You know, it's exceptional. And the ability to innovate, you know, again, I think is exceptional. I think the way Singapore has positioned itself to be regional headquarters, again, is exceptional and gives incentives. The other side of the coin is it is expensive now. China is an enormous market and is on the doorstep. Well, Hong Kong's part of China, but it's physically on the doorstep. And deal size, business, everything in North Asia dwarfs Southeast Asia in terms of that. That doesn't mean Southeast Asia is not important at all. It's just a different model, you know, to handle it. The other one is I think the politics things you mentioned and stuff, I wouldn't take that too seriously as a decision making. I think it does make sense, though, to have Singapore and Hong Kong as HQ. And very interestingly, there's other major cities in Asia where you've got KL, you've got Ho Chi Minh, obviously in Southeast Asia, you've got Bangkok. And that ASEAN story, where a number of those countries, in different ways promote themselves as leaders of ASEAN, I think these are very, very good locations for doing business.
Jakarta as well, Andrew,
and Jakarta
right?
as well. I mean, when you look at the Indonesian stock exchange and China investment into Indonesia. So I think it's a great question, Mike. So I always would support Hong Kong and Singapore. And I think, though, when we're talking about it, recognition, Manila's another, where there's been huge positive changes in governance. And as a place for headquarters or management teams to be located, the choice is greater than Hong Kong and Singapore. I really think it is.
No, I agree. I mean, you kind of covered my next point, which was really talking about the economies of the Philippines, Thailand, Malaysia, Indonesia. But because of the recent political changes, which make it more attractive as more stability comes to those regions. But so coming to the end of our sort of interview, I think it's always important to look at looking ahead. So we've talked about some of the trends and everything, the big sort of trend topics. But as you know, from being the vice chairman of KPMG China and senior partner, where do you feel you're putting your attention on, and before the end of the year is out and into 2024?
I think from a business perspective, Mike, COVID fatigue of organizations and of people is a big challenge.
So I think passive to proactive.
I think it's too simple to say everyone's become passive. It's just, gosh, people have been through the mill. And companies have been through the mill. But never before has resilience, agility, flexibility been so important. I don't use the expression new normal anymore, but the reality is the world is so different. There will be winners and losers. Those people who understand it and get the agility in their business models and have the flexibility to change path and change course, and get a flexibility in their costs and understand in particular what their customers are looking for, customers want, and read the mood music of what they're seeing geopolitically, and then adjust accordingly, will do well. Those who have their heads in the sand, I think the future can be very, very distressing. And then you get back to, capital is what I always start with, but what I always end with, Mike, is governance. And this is something I think PBEC have been pushing very hard. Yes, we could talk about digital transformation. We could talk about ESG. We could talk about diversity, inclusion, equity. It all comes under umbrella of governance. And the governance is all about, first, what is the purpose of your organization? What are you there for? What are you doing? And I would just encourage everybody to revisit this, refresh it. Purpose, culture, values, conduct, these things are the foundation for successful businesses, particularly when they have to be so agile. So maybe I leave it with that, Mike. But I am massively bullish on Pacific Basin. I'm a massive supporter of Hong Kong mainland integration, the economic opportunities. Massive supporter of ASEAN. A wonderful market, and with a young population, consumer-driven growth will be absolutely amazing. And then the linkages in of Asia Pacific, Middle East, and beyond is great. But I leave one thing, Mike, for us just to think about. We've got APAC coming up. Asia's voice generally in global institutions, global trade institutions, isn't as great as it should be. The allocation of international capital to Asia Pacific is less than the relative economic weighting warrants. And I think it's beholden to all of us in organizations like Pacific Basin Economic Council to raise our voice on this. We are the voice of trade. We have RCEP now, which is over a third of the global GDP. We've got the Trans-Pacific Trading Partnership. We've got the Southeast, we've got ASEAN, and then we've got the overall Asian trade area. These areas are super, super important, and getting the Asia voice loud and clear at global level to influence policy, influence regulation, I think super important.
Well, folks, you heard it there from the chairman himself. In fact, you know, the whole point of our interviews is to find out what's going on. You've been given a great flavor of what to come and what's been happening in the region and how it's all connected to this region now. And PBEC sits in the heart of that. And typically, we normally ask our interviewees a last question about what's the value prop of what they do. But I had a question of value prop of becoming a member of PBEC, but I think our chairman has already answered the value of becoming a member of PBEC is just being involved with such interesting content that you won't get in the FT or other places so easily. It's all been put concisely together over the last half an hour or so. So thank you for joining, and keep you posted for the next one. But you can see us on all usual channels. You can find us on Apple, you can find us on Spotify, you can find us on Google. So till next time, thank you for joining us. Goodbye for now.
The Value Prop Show is brought to you by PBEC, the Pacific Basin Economic Council. You can follow us and subscribe on our LinkedIn, YouTube, and Twitter. Thanks for watching and listening, and see you in the next episode.